Hey, everybody, welcome. It's the Do Did Will Story of People podcast for another week. And the first gentleman has arrived to the show. We've done a couple of weeks of some incredible women, and it's time to talk to a very awesome buddy of mine who does great things in financial space and crypto space. So, welcome, Scott McGregor, to the show. How are you,
Brenton,
sir?
thanks. I'm great. Don't set the bar too high for people. I don't want their expectations to be too big when it comes to me. But I'm just honored to be here, my friend. It's good to talk to you. Good to see
It's
you.
it's awesome, and we'll get into all of the stuff, but you were our go-to and are our go-to person on formerly the Dean Blundell Network, but now Crier Media Network for everything finance. And
Hmm.
if you guys want some really amazing entertainment, you need to tune into, the last handful of appearances of Scott on Dean's show because of the madness of the fall of crypto and FTX and all the madness, and him and Lachlan just going toe to toe on some fun stuff, and Lindley and everybody. It's some great entertainment because the old people yelling from the porch, are going on
Yeah,
about
old man yelling
about
at the
it.
cloud.
The old man yelling at the clouds. Aren't totally on board with the whole crypto space, and people are reluctant around the world right now, given what was kind of going on with the madness. So I thought, what better time? Launch of a brand new show, people that do, people that did, and people that will. You fit into all three categories, and an extremely topical and important time to have a conversation about crypto, NFTs, and all these things in the middle. And try to maybe break some of this stuff down and make it a little bit easier to understand for people.
Sure.
But that's kind of what's happening. So, anyway, Scott is here from the Hot Walla podcast. Everything finance, you name it. So let's get rolling here, sir. Scott, what do you do?
So I am a swing trader. Typically, I started swing trading over 10 years ago, and that was while I was working a full time job in broadcasting. So I was in broadcasting for over 15 years, and then I kind of had a boss that got into trading, and he would kind of brag of like some of these trades he was making. Hey, look how much money I'm making, and I kind of had this attitude like, well, I mean, it's my boss. I'm smarter than that guy. I can figure this out too. And so I kind of got my hands a little dirty messing around with some trading just in a tax-free savings account, kind of trying it out and did that for a while. And I didn't really do it very consistently for a while, but eventually I kind of developed a trading strategy that works for my personality and just traded that. And then eventually I kind of got noticed, I was doing some videos on YouTube and whatnot, and I got noticed by a guy named Dan Fitzpatrick, who runs a website called stockmarketmentor.com. And I had an opportunity to leave broadcasting and join him and work for him and his members. We have thousands of members from all over the world who are just traders, wanting to trade their own account, retail traders and whatnot. And so I have been working closely with Dan Fitzpatrick at stockmarketmentor.com since I think 2019. I think is when I started, and I started out just doing a few videos for his website and whatever. And then, like I said, he kind of said, "Hey, I like what you do. You're helpful for members, and you're a good trader. Why don't you come out and leave radio and come trade with me every day?" And so I've been doing that for a couple of years now. Helping people, just like I said, retail traders kind of trade their own account and ideally gain financial independence.
It's brand new for so many people, myself included. I always am fascinated by that space, and obviously we grew up with the '80s Wall Street movies and all these
Yeah.
cool things about how rad and wicked the stock market was. But it's a scary space for some, and I believe that you break it down very, very simply for a great deal of people. So I think it's awesome and important, and it's a go to. You should definitely check out Scott's stuff because he very much breaks it down simply. And I really encourage you to check out all of his things when it comes to that. Now we
Thanks,
are
man.
in a space now of these magical words like what is crypto and what is
Hmm.
NFT. So while we're kind of hanging on the what do you do part here of this show, I want you to do me a favor and tell me what the hell is crypto, Scott?
Okay, great. So, I kind of started out like most people, very skeptical about Bitcoin and all of these cryptos. I didn't know anything about it, and it was just noise to me. And, I just I used my technical analysis that I learned through trading stocks and options and just applied it to crypto. And so I was looking at Bitcoin in throughout the summer of 2019, that kind of thing, 2020, just kind of interested in it. And my brother-in-law was like, "Ah, yeah, it's like internet money. It's money for the internet." And I was like, "Oh, okay, that's weird. That doesn't make sense to me." And so what I did was I ended up just kind of buying Bitcoin because it was breaking out on a weekly chart. And so I use charts and technical analysis for my trading, and I bought it, not really knowing what it was. And I immediately got rewarded because the market started to kind of chug higher. And so that kind of got me interested of like, okay, I'm making money from this thing, but I don't know what this thing is. And so I kind of learned as I went along with, everyone else of like what this stuff actually is. And so there's really two schools of thought, two camps. There is Bitcoin, which is the world's largest decentralized monetary network. And then there is crypto, and those two things are really separated. And so when a listener is listening to this, don't think of Bitcoin and crypto as the same thing. Crypto is essentially a digital asset that usually represents a network of some kind. And Bitcoin is already kind of a thing where it's a decentralized monetary network. So, Brenton, if I want to send you $50, I can send you $50 from my phone to your phone without a third party being involved. Like there's no bank involved with that transfer. So that's why Bitcoin is a decentralized monetary network. It's just software and it works. And I'm sending you money and no one else is involved. There's no person on the end going, "Oh yeah, we'll approve this transaction," or whatever. It's just simply a monetary network that is decentralized and has been running for over 13 years. In fact, this year, I think, is Bitcoin's 14th birthday. Now,
Wow.
everything else I call crypto. So that includes Ethereum. Now, what is Ethereum? Ethereum is kind of like Bitcoin, but a little more advanced. It has different technology built in. And so you can actually build smart contracts on top of Ethereum, for example. And essentially, a smart contract would be like, okay, let's set up a smart contract where every month on the first of the month, I have money sent to Brenton because he's my landlord, and that allows me to have my front door unlocked somehow. And so that's kind of just a basic understanding of what a smart contract would be. And so there's Bitcoin, and then there's crypto, and I really want people to understand that those are separate things. So
Completely separate.
yeah, Bitcoin is listed as a commodity under the CFTC, and crypto, at least some of them, are unregistered securities. So they're kind of like stocks in a way, but they're unregistered for the most part and really kind of unregulated.
Well, certainly unregulated, and no more no more than we've learned in the last couple of weeks with the crash of FTX. And I'm not going to pretend to dive into knowing anything about this other than what I've studied on, and I got friends that fill me in and all the rest of it. But ultimately, let me go to this for a second. So I'm sitting here at my computer, and
Hmm.
you say to me, "You should buy Bitcoin. It's $22,000 a coin right now, which whatever it's going to be." And I
Yeah.
say, "Scott, how do I do that?" And then you direct me to, like you did before, to Shake Pay or some kind of cool thing. But there are areas where you can buy stuff, right? I believe it's Binance and FTX. There's these two different areas where you can actually buy Bitcoin through certain avenues. Am I correct in saying that?
That's right. Yeah. So you have to use a non-typical exchange. So if you and I are trading stocks, we can use a bank like TD or Scotiabank or a signal exchange or account thing like a Quest Trade or something like that. But
Sure.
when it comes to buying crypto, we don't have that functionality built into those rails yet. And so you have to use something like an app like ShakePay or There's another one. Coinbase is very popular. Binance is another one, although I don't think people in Ontario can use Binance because they're kind of in a fight right now with the Ontario securities.
Sure.
And so, basically, depending on your jurisdiction, you can buy Bitcoin and own Bitcoin, in an app or on a wallet like MetaMask that you can attach to a Google Chrome browser, something like that. And the question would be, well, why would anyone want to buy Bitcoin? You hear me talking about it. And so the value of Bitcoin, Brenton, comes from the use of the network. And so if you think of networks, you think of like a social network like Facebook,
Sure.
right? And the more people who use Facebook, the more valuable it becomes. The more people who use Instagram, the more valuable Facebook becomes. The more people who use Google, the more valuable that information network becomes. The more valuable, the more people that use Android network on their phone, the more
Yes.
valuable that network becomes. And so that's how you think of networks. And so when you're valuing Bitcoin, well, okay, I get it, it's internet money, but why does it have value? It's because there's only so many Bitcoin that are in existence, that will ever be in existence. And the more people that use that network, the more valuable that network becomes. And so that's what brings value to Bitcoin. And that's what brings value to networks generally. It's the number of transactions and the number of users. And we saw the fall of MySpace when everyone stopped using MySpace and started using Facebook. We saw the value of that network drop, and we saw the value of Facebook rise. And so does that kind of give you
absolutely.
an idea?
I don't think anyone's ever actually compared it to a network before. So you could put that into like the more people that watch NBC, the more people that watch CBS, the more people that watch TSN, the more people that watch Sportsnet, ESPN, however you want to break it down. Same thing applies to this. The more people that use Binance, the more people that used FTX, the more people that use ShakePay, the more people that use, MetaMask. There's all these different kind of like places. And I think the space is still so very, very confusing for a lot of people that are on the outside. But I think breaking it down simply like that. I just was in a coffee shop the other day and saw the first ATM machine.
Oh yeah,
that was like a Bitcoin
I've seen
ATM
those.
machine where you could pay for your order with Bitcoin at the coffee shop, and you had to
That's
do it
so
through
cool.
this machine. And I'm like, wow, So it was very cool to kind of watch that. I have gotten out of it minorly, looking to come back into it, but it was just sort of like, wow, okay, it's real, and it's definitely coming along. So in that regard, we definitely we'll dumb it down even more. But there was definitely a moment there a couple of weeks ago when everyone around the water cooler was talking about the crash of Bitcoin, or the crash of this world. As basic and dumbed down as you could make this. Curious, we all know about this. You talked about this on your show about the FTX crash, and then what happened between FTX, Binance. I think there was a little bit of back and forth. Break it down as to, keeping with this theme of the network you just spoke about. Can you wrap what happened into that theory?
Right. So, when we talk about Bitcoin, Bitcoin is a decentralized network. FTX was a centralized exchange. And so, a lot of hardcore Bitcoiners, they will say you'll want to take your coins off an exchange and put it into a wallet, whether that's a hardware wallet like a Ledger or a Trezor, or a software wallet, like a Coinbase wallet or something on your phone. And so what ended up happening is FTX was an exchange, and they also had a proprietary trading business on the side called Alameda Research. And what happened was Alameda Research ended up making some bad bets, and they had some margin calls. And so a margin call is basically when you owe money to someone and they're calling you up literally and saying, okay, we'd like to call, or we're calling now to kind of get our money back. And so that's what we ended up seeing with FTX, is where Alameda Research, the prop trading firm, had margin calls, and the way that they paid off that money is they ended up using user funds through FTX. And so the FTX exchange, people started getting a little shady of like, something weird is happening here with FTX. Everyone should take their coins off the exchange. Well, eventually, too many people took their coins off the exchange, and FTX essentially went insolvent. And that's why people lost their money, is because they were paying off these margin calls with user funds, because essentially they had all of their wealth, well, not all of it, but a significant portion of their money tied up into a token that they created. They created it out of thin air and they gave it value. And so when you have value that is based on a asset that could go up or down, the value of your portfolio goes down if that asset goes down. And so people started testing the FTT token, and they started shorting the FTT token to see, okay, this token that they invented, is it really real? Like, is there a real bid under that? And if there is, this amount of short selling should be consumed by all the buyers that are coming in and be like, no, 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 we believe in FTT, et cetera, et cetera. And so the FTT token started crashing, and then the value of the assets that Alameda Research has collateralized started dropping as well. And then again, so, let's say I have $10 billion, and then they started attacking this thing worth $10 billion. Now it's only worth $2 billion. Well, I got an $8 billion hole I got to fill. Where am I going to get that money from? Oh, I know. We have all these users who have money. Let's start using those assets and cover our
They were
hole.
challenged? Am I right in that they were challenged from somebody, or somebody had made a tweet saying you should look into FTX, and was that their competition that did that? So in essence,
So
let me dumb that down even more. It was
sure.
like somebody at Fox News says, "I heard this about CNN. You should stop watching
Hmm.
it." And then CNN were like, "Wait a minute, what?" And then everyone bailed. Or NBC was like, "I heard CBS is going to lose all their programming. You need, to like, was it something that simple?"
It was somewhat similar. So there was kind of this beef between the CEO of Binance,
Yeah.
CZ, and the CEO of FTX, which was Sam Bankman-Fried. And so CZ was one of the first investors into FTX, the exchange. And so Binance helped to get FTX started. And in return for that money, they ended up getting a bunch of this FTT token and all of these other assets of, if you're investing in my company, this is how I'll pay you back. I'll pay you back in this token. And then they had a bunch of this token, and
Hmm.
CZ had heard that Sam Bankman-Fried was essentially lobbying against Binance because Sam never liked decentralization. He never liked Bitcoin. He wanted control over everything. And so he had his own lobbying going on in Washington to basically be like, look, you know if you trust FTX with everything, it's all going to be great. And, if I invested in FTX and I'm a competing exchange, I don't like the sounds of that. Sounds like you're trying to put me out of business.
Yeah.
And so essentially, CZ from Binance came out and said, you know what? We have heard these rumors. We don't like it. And we own a bunch of this FTT token, and we're going to start selling it now, because we kind of just want to get out of this deal that we had made. And so, we gave you the money. We'll take our money out via this FTT token, and good luck to everyone. And then that's kind of when we saw the run on the bank when it came to FTX, because CZ is a big name. Binance is one of the biggest exchanges in the world. And if they say that we are going to start selling this token, well, why? What's wrong? And so that's where kind of the run on the bank happened. People started taking their money out of FTX, and then the FTT token started to really kind of break down. And then that's where we saw kind of this cascade of forced selling in all
Yeah.
crypto, because it wasn't just Bitcoin; it was all crypto. And what forced selling is again, if I have to raise money, if I'm a fund and I got a bunch of money, tied up in these assets, I need that money on my balance sheet now because I don't think things are looking good. And then they are forced to sell those assets. And then
Crazy.
you just get this big cascade of selling. And so that's where we saw that happen twice, actually, because Terra Luna, which
Yeah.
was a crypto that was based on an algorithmic stable coin, it ended up failing. And then we saw this big cascade of forced selling. And then everything kind of evened out a bit. And then it was FTX coming in, and then more forced selling. And that really brought the price down, of Bitcoin to like these unbelievable levels. It basically gave back the entire move from 2 years, where it ran up from, at the COVID low, it was at around 3,000. It ran up to 69,000. and then pulled back from 69,000 down to around that 16, 15 level.
It's
And
crazy.
as you mentioned, now it's just around that 21,000, almost 22,000 as we record right now.
I pay a little bit of attention, and I shake the app every day. I shake the app every day, but and again, in classic stock fashion, I should be buying like crazy right now. But again, I need reassurance on this space like everybody else before I dive in again. So one
Sure.
of the
Does
things
that
that
explanation make sense,
it
though,
absolutely
Brenton?
makes sense from the
Okay,
standpoint of dumbing it down as best as we can, because a lot of
great.
people are new to this space, myself included, still, even after a couple of years of investigating it. But it's happening and moving so fast that I'm just trying
Hmm.
to catch up to like, where's Bitcoin at right now? And then there's like, we'll
Right.
get into NFTs and we'll get into a few other things after that. But it's quite something. But I do have a question, a couple questions that we're going to get to from a friend of mine that's into it. But I definitely wanted to get into a few things here. You just spoke about Luna, so you being the expert, trying to be a little bit vulnerable here. How did you make out on the Luna and FTX crash?
So I never owned Luna. I never owned Terra Luna. I actually had friends that were in Terra Luna, and some people who I follow, like on Twitter or whatever, they were involved. I just didn't get it. I didn't really understand it. I was like, okay, so there's a mechanism where if I buy this stable coin, which was the UST stable coin, then it burns a certain amount of this Terra Luna token, and that is what helps to drive the value of Terra Luna up. And so we ended up seeing Terra Luna go from like $2, Brenton, to like $200, something like that.
Crazy.
And then what ended up happening is again, the market tests everything. And so the market came in to test how strong this algorithmic stablecoin was, because the idea is you buy UST, you burn Terra Luna. But if you sell UST, you then also you sell Terra Luna. I think I'm getting that right. I'm a little confused with myself here. And so you buy one, it sells the other. You sell one, it buys the other. Essentially, is how it works. And so we saw the break of the peg, and the peg being that it's a stable coin, so it should stay at $1. We saw that peg break, and then we saw cascade selling of Terra Luna, the asset. And so it ended up just becoming this big downward spiral, which unfortunately is the problem with algorithmic stablecoins. And one of the reasons that I believe the US is outlawing algorithmic stablecoins is
Crazy.
because this happened. So,
Well, they're going to
um,
get it. There talk about trying to regulate this finally, or is it? Do you think there's even
yeah,
a chance of it happening?
oh, I definitely think so, and
Yeah.
it's something that the industry needs and wants. I
Yeah.
don't know any hardcore crypto investor who doesn't want regulation.
Sure.
There's some people who say, "Yeah, but I thought that was the whole point. Is like live under the system, man." Look, I come from traditional finance. I started trading gold mining stocks. And I know that if I buy a gold mining stock and the company goes to zero, I'm probably going to lose my money. And so I want to know that I have those same safety and protections that I have buying a stock as I do buying a digital asset or a
Yeah.
crypto. And so those I think are coming. It's really slow. And one of the reasons it's really slow is just because the technology is moving so fast and it takes regulators so long to catch up, and
It's
I
moving
think with
so fast, Scott. It's like I just when I think I'm like I got this, and I was like in on the shake pay. I had some Ethereum, I had some stuff. I was moving through, and then I'm like, I don't now like I'm diving into. I'm gonna try to dive into NFTs next, and we'll get into that. But
yeah.
God, it's so fast, and I don't want to be old man on the porch, but I am trying very hard not to be old man on the porch, because I want to be open to all this new stuff. But man, it takes a long time to study. You dove in a little bit at the beginning of this thing, but let's move to the next section of the show.
Sure.
Scott, how did you do it?
Oh man, I did it by losing a lot of money, and I did it wrong for so many years. Like I look back at my history, and I had a few good wins here and there. But Brenton, I had a chance to make life changing money, and I did it wrong. And so I
How?
ended up.
How?
Well, one of the things about being an investor is number one, kind of being a contrarian. And so a lot of times in investing, when everyone agrees with you, and I heard this quote today and I just loved it. When everyone agrees with you as an investor, chances are you're wrong. And, I started out trading just gold mining stocks, didn't really know what I was doing, just kind of picked a few. And then I started getting into kind of lithium and mining stocks like that, because I saw kind of the electric car revolution starting,
Sure.
around 2010, 2012, something like that. And so I started buying some lithium miners, and I got some good gains on it. I bought this one, it's called Lithium Americas, and I bought it for like 75 cents and I sold it for like $2. And I thought oh my gosh, I am a god. Meanwhile, had I done nothing, that stock ended up going up over $50.
Jeez.
And so I did it by making a lot of mistakes and then taking note of my mistakes and saying, okay, I see what happened here. I saw the outcome. How can I get better? And as an active investor, as a trader, that's what you're trying to always do. You're always just trying to get a little bit better than you were the day before, the week before, the month before, and the year before. And if you can do that consistently, then you can make life-changing money in the market. And so that's what I did essentially, is I developed a strategy for swing trading that makes sense for my personality. I'm not someone who loves to day trade. I don't like being they call it being a dick for a tick, where it's like, oh, it's up a little. Okay, I'm going to sell now. I just didn't like that intensity. And so my style of swing trading is where I want to buy something and I want to hold it for ideally a couple of days, even better if it's for a couple of weeks, because that's where I can ride a little bit of that trend and then make pretty good money, because you can make 1%, 2% a day, do that for 20 days, or you can just buy a stock that's starting to break out of a nice base and ride it for a couple of weeks, make 20% and not have to do anything. And I like that. I like that ability to ride a trend.
How long did it take you to get to the spot where you're comfortable? You can look at a screen, read it right away, like a piano player, like reading
Hmm.
notes. What was that process? Because you were in radio before, and
Yeah.
that's a bit of a switch over, and you have to be trained on it. And again, like we discussed, it moves fast.
Hmm.
So where were you? How long did it take you to be comfortable?
I mean, it took me over 10 years,
Wow.
to be honest, 10 years of trying to do it all the time. And then once I started to do it full time, I got even better quicker, kind of an exponential, because if you're just doing it casually, and I was for a while, it's like, you kind of have casual results. But
Hmm.
just like any business, if you treat it like a business and you treat it like a serious form of income or a serious job, then you're going to get better quicker. And so, I kind of can get a little obsessive about things. And so what I ended up doing was, at my job in the radio, is I brought an extra monitor to work. And so
Ah,
I would have like a monitor of like my trades and my stocks, and then I'd have another monitor with like my real work. And so that's kind of how I did it, because I wanted to just stare at charts all day,
sure.
and not that my radio job wasn't great and fulfilling, because it was, and I feel like I did some really great work there, but I just kind of felt like I was being pulled in a different direction. And I just said, I don't know where this is going to go, but I enjoy it. I think it's important, and I want to learn as much as I can about it. And so that's kind of what I did, is that I just, over the years, kind of got a little more serious and a little more serious, and then eventually got to kind of where I'm at now, where I'm pretty comfortable trading and dealing with risk.
That
And if you're in radio or any business where you don't make a lot of money, it can be a big deal to like risk $1,000 or put a thousand
sure.
dollars on a trade. Like that was, I remember that being a big deal when I put
It's the
$1,000 into a
on
trading
something.
account, thinking, okay, this is like, whew, this is a lot of money, and now I'm now my account fluctuates $1,000 a day, or
Yeah.
whatever. My crypto account fluctuates more than that, but I have my thesis, I have my kind of strategy, and I just stick to that. So it takes a while to kind of figure it out, because what I do may not be good for you, and it may
Hmm.
not be good for the person listening or watching to this. And so it's really about knowing yourself, knowing your personality, and then finding a trading style that fits with it, because I know people who can trade 20 plus stocks a day, day trading, and they're like living their best life. and that would give me a heart attack. You know what I mean? So it's just really about who you are as a person, and then
Yeah.
finding a trading style that works for you and your lifestyle.
What do you do have you learned how to research properly now? And by that I mean like you know where to avoid and you go to certain places for your information. But I've got another question from a caller, from a watcher, and from somebody interested. But what are your what are you in NFTs right now? Or are you sticking to the
Mhm.
other side of it? And what is your research process in you making these decisions to invest your money in?
Yeah, so I do have a bunch of NFTs. Actually, I just wrote my friends because I just had my best NFT return ever. Something I bought from someone I follow on Twitter, and he put out an NFT project, and I'm like, oh, this is cool. I like this guy. Yeah, I'll buy it. And I bought it for $8, and
Nice.
now it's selling for 300.
Where did you buy it?
And I just bought it through the Mint website that he posted, but mostly I buy NFTs through a website called OpenSea.
Sure.
And so what I find is it's really hard to do like fundamental analysis on NFTs. You know, you really need a few criteria of what makes an NFT valuable. And it really starts again with the network. So if this is a community of people, how important do people think that this project is? How engaged are they in this project? Are they willing to promote this project for themselves? Are they willing to get involved in the community on Discord? Are they doing anything with it? And so you can look at NFTs again as kind of a network of value. And the NFT is just a digital representation or a token of that value. And a lot of times these tokens are PFPs or profile pictures where people say, look, I'm part of this community and here's my proof. It's a bored ape or it's a monkey with making a funny face or, something like that. Yeah, there it is right there. And so this is the Bored Ape Yacht Club. And the Bored Ape Yacht Club is essentially a community of people who want to be in the club. And this is their profile picture or one of their assets. And then when you have access to this community, you have access to, maybe certain perks. I believe they released a metaverse as well. And so if you were a holder of one of these apes, you then got airdropped more stuff that you could then turn around and sell. And so, you could use it as like a money making thing or something like that.
NFTs are it's a crazy space right now. So I heard about it years ago through music. We got bands like Our Lady Peace and some of these bands that are living in that space like crazy, and a
Hmm.
lot of bands are taking it to that space to to own their fans again and kind of reconnect and have something more personal one-on-one with them instead of it just being taken and they have no control over it. So it's kind of a cool space. But I had curiosities about it because I actually want to make one. So I was sort of looking at that process and I'm investigating it a little bit right now.
Okay.
Yeah, it's a fun thing to do
I
it.
mean, for
So
musicians, it makes total sense,
yeah,
just like what you're saying. You get to own your material. If I'm Our Lady Peace, I can put out an NFT of, an album.
yeah,
So actually, Kings of Leon did this. And I bought the Kings of Leon NFT where I get a digital picture of the album as an NFT. I
yeah.
then got a download of the album. And then I also got a gold record, limited edition, mailed out to me on vinyl, which is in a shelf
Very
behind
cool.
me. And so, and then
And what did
as
that
the
cost, if you
band,
don't mind me asking? What did
a
that
couple
cost
hundred
for that?
bucks.
So it was a couple $100. And how many did they make, or is it unlimited?
No, they cut it off at a certain point. So I think
So
there's
it's
only
almost like a
2,000.
like a concert poster. So Pearl Jam make 250 concert posters for that specific city. Once they're gone, they're gone. So in essence, they're a live NFT. You're holding it in your hand. It's just not digital. So
Exactly. Yeah.
in essence, it's
And
the
the
same thing,
bands get the
correct?
money after
Sure.
the resale. And so
Yeah,
that's
yeah.
one of the things. Like if I was to own one of the Bored Apes or whatever, and I sold it, the creators of Bored Ape actually get a cut of that sale.
Every
And so
time you sell it.
imagine if you're a
Yeah,
musician, you
yeah.
get a cut of every sale of your NFT. And so you're constantly making money. You make
Amazing.
money off the original, and then you get money as the popularity grows and as people are trading it or whatever. And I mean, we saw Donald Trump do this. I did a
I
bit
know.
about the Donald Trump NFT. People made fun of it. Bro, he made $4 million in a day.
I know, and
Make fun of it all you want.
my friend who's asking the questions is severely kicking himself in the nuts on a
Oh, it's
daily
crazy.
basis, because he didn't do it, and myself included. I was like, should I take a flyer on this thing? And I didn't, but I was like, just because I'm like, I just can't do it. Okay, we're gonna move. A couple more minutes left. I know you're a busy guy, so what will you do next, sir?
So next is just continue to get better. Like I had a rough year in 2022, much like everyone else, and I didn't end up the year as I had hoped in the beginning. And so now it's just really kind of reassuring myself of the basics of what I do. And so that's really kind of what I recommend to people. Anyone who's an active investor who's struggling, I'm always like, okay, where are you complicating things? Time to get back to the basics. And so that's really my focus for 2023 is just focus on what you're good at, focus on what you do best, and then just become a master of that thing. And so for me, it's always about buying stocks or crypto that are in basis, sideways consolidation. You can see the chart of Bitcoin here as
Yes.
it's in a sideways consolidation. Guess what, Brenton? That's where I was buying. I
Yeah.
was buying in that sideways consolidation. And now, whoop, we're way up here. And so that's what I do best as an active investor. And so, I'm seeing it pay off over the last month or so here in crypto, though it took a while and though it was scary. I just stuck to my process. And so now I'm getting rewarded with a nice little pop here in BTC. So sticking to what you do best, that's kind of my plan. And then at stockmarketmentor.com, I want to continue to evolve my swing trading course. In 2021, I put out a swing trading workshop. It's about 6.5 hours long, and it goes over all of my setups of like, here's my key setups. Here's how I trade them. Here's exactly what I'm looking for. And then here's how I exit the trade. And so I want to continue to kind of build on that. And we're ideally going to be putting out a crypto course sometime this year that kind of answers all of those questions that you were asking. Number one, what is it? Why does it exist? Why is it a thing? And why should I care about it? And then number two, how do I make money off of that? And so that's kind of my goal for this year is to put that together. It took me over a year to build out my swing trading course. And, because I'm a perfectionist and I want everything to be just right. And I also want to make sure that I'm super clear. And so with my swing trading course, I wrote out every single word that I wanted to tell people. It wasn't just like, you can figure it out for yourself, but here's the basics. No, like I took it very seriously and I wrote out every single word and said that word verbatim within the course because I wanted it to be just quality. And so that's kind of my plan for crypto because it is such a bigger world than just trading patterns.
Yeah.
But there are certain metrics that you can use for trading stocks, that you can also cross over into crypto. You can use the same chart patterns, et cetera. But then there's just different fundamental analysis that you have to do to kind of understand it. So that's kind of my plan for this year. And then I want to continue doing my podcast, the Hot Wallet podcast. I'm kind of slow on. I mentioned this when you and I were getting going. I kind of have these spurts of creativity where I'll do like 3 of them, and then I won't do anything for like a month. And so that's kind of my thought now is like, okay, I want to keep doing this. I want to keep talking to people who are, in Web3 or in active investing or in crypto and stuff like that, and just kind of continue to build that out through Crier Media. So that's kind of my plan is to do those things, and then hopefully at the end of the year I can take my family on vacation somewhere.
Are you anticipating? Final question here for you. Are you anticipating a big year for crypto to come back after all this stuff, or level
So
stay the course? What's your
one
thoughts?
of the main factors in crypto's fall, not only was it that we had 2 major frauds kind of fall out of the sky, was the rate of change for interest rates. We had the
Mm.
fastest rate of change for interest rates in all of human history. And, we had low rates for a while, super low interest rates for a while, free money environment for a while, cheap money. And now we've kind of moved into a higher interest rate environment. And typically in high interest rate environments, high risk assets like crypto or NASDAQ stocks, they typically don't do well. And so I'm kind of expecting a lot of sideways chop and slop for the next 6 months here when it comes to crypto. Now, that doesn't mean that I don't want to be involved in that, because as we see from the Bitcoin chart behind me, you can buy things at 17,000 and they can run up to 22,000. And so those trading opportunities are still around. And so I want to be open-minded to better than expected outcomes, but I also know that just raising interest rates as fast as we did here in Canada, the US, and around the world has a major impact on risk assets. And we don't know how that's going to affect the economy as well going forward. So, there's a lot of talk about recession. To be honest, Brenton, I've been talking about recession since March of last year on the Dean Blundell show.
Yeah.
No one cared. And I said, yeah, and hyperinflation, things are going to get really expensive because they printed all this money. And everyone's like, yeah, whatever, crazy crypto guy. Just tell me about the Bitcoin. And meanwhile, we saw exactly that. And so we don't know what a world is going to look like with interest rates higher for longer. And so that's one thing that I think is going to put just natural downward pressure on high risk assets like crypto and Bitcoin. But that means, in my opinion, that this is a great time to learn about it. As I mentioned, as an investor, you kind of want to be a contrarian. When everyone says something is going to zero, chances are it's not going to zero. Just like when everyone said in 2021, Bitcoin's going to 100,000, guess what happened? It did the opposite. And so you want to pay attention to when everyone is on one side of the trade. And that's something that I pay attention to. Like I saw the post from everyone saying, this is it. Crypto's dead. It's still dead. It's dead again. Bitcoin's over. It's going to zero, blah, blah, blah. I was like, everyone thinks that. What if it isn't? What's my risk reward then? And, I kind of did the math and I thought, okay, well, if I buy a Bitcoin at 17,000, I'm risking 17,000. My upside is unlimited. Now I just have to deal with my time frame. How long do I want to hold it for? And so, when everyone is on one side of the trade, Brenton, that's when you want to look the other way, because chances are someone's wrong. Not everyone can be right at the same time. And that's what makes a market. And so there was a lot of people who were like clamoring, no, Bitcoin's way too high. Bitcoin's way too high. But the majority of people around 68,000, 69,000, like, nope, this is it. 100,000 for sure. It's going to be great. We're going to get that spot ETF and we're going to go to the moon. And we saw Elon Musk on, he basically topped Dogecoin. When he's on, when those things happen, you really got to pay attention to it from an other side of the trade perspective. So that's kind of my thought. The consensus is that it's probably going to, retest 10,000. I think the 17,000 level, 16,000 is pretty clear here on Bitcoin. Mm-hmm. And so I'm more of a buyer here for the long term. But
sure,
I have a long-term time horizon. I've always said I want to hold it for a decade, because I've had trades before where I sold out way too soon, but my thesis ultimately played out and I could have made life-changing money.
Well, and coulda, shoulda, coulda, woulda is the story of everything now, isn't it?
I know. And so that's why this time I'm not getting in my own way. I have a long-term thesis, long-term perspective, and I need to stick to that, because if I don't, I know in 10 years, if Bitcoin is way higher than it is now, I'm going to be like, I knew it.
Shoulda, coulda, woulda.
Yeah. That should be the name of my new podcast.
Well, this one's called Do Did Will, the Story of People podcast. You do things, you did things, and sounds like you will do things. We'll revisit this in 10 years and see how you made out holding on to all this stuff. But I appreciate the time today, buddy. This was great, very informative, and I wanted to get you on because everyone needs a finance person, and Scott is the guy that breaks it down for me pretty simply. And I really appreciate the time. You can check him out. Make sure you check out the Hot Wallet podcast, which is very cool. He promises to do more episodes for you, so make sure you dive in on that. I think you should. You speak well. You're very informative, and
thanks, buddy.
And it's awesome. And also make sure you check out Scott. He's at stockmarketmentor.com, and it sounds like you got a fancy little book coming out that's going to help the rest of us kind of wade through all this stuff, and I appreciate the efforts that you're putting into that as well. So
thanks, buddy.
Anywhere else
it's an honor to be on your show, Brenton, and just hang with you once again, so appreciate it.
Good stuff. Everybody, that has been Do Did Will for another week. The Story of People podcast continues next week with someone else that fits into one of these fancy little categories. My guest today, Scott, fit into all three, and I appreciate the time. Thanks, everybody. Enjoy.